Bitcoin is on the move again. So what is going on with Bitcoin? Our last video last week on Thursday, we talked about the weekend price action that we've been seeing where the market crept up towards Thursday, Friday, and then started leaking on Friday, Saturday, Sunday, leading into sell-offs on Monday. This past weekend, we kind of followed suit. So let's take a look and see what is going on right now with Bitcoin and the markets in general. Last week when we were looking at this, we talked about how traditional markets and Bitcoin are now pretty much, well, cryptocurrency as well, not just Bitcoin, but all cryptocurrencies pretty much are tied at the hip, mainly Bitcoin. Bitcoin is a risk on asset. It's going to respond accordingly like the dollar and like gold does. And as you can see, Bitcoin has been this is the hourly chart. It's been kind of steady downhill here over the last few days, making all kinds of patterns. If you look at the daily and you zoom out and look at the higher time frames, we've been looking at this fractal here on Bitcoin, the original sell-off back in March, April, and May, and the price action and the patterns it's making, and the current fractal that we're seeing, which is almost an identical replica of what we saw over here. What's interesting is we had the sell-off, we had a little sideways action, capitulation to the bottom, then we bounced into somewhat of a bull flag, but then we had a little drop and then further upward action and rolling over down into that little initial drop, sideways action, a little bit of a bounce, down to the bottom. Now we're in that sideways action. We haven't really seen capitulation here at this point. Wasn't a whole lot of fear, wasn't a whole lot of panic like we had kind of down here when the market was falling off a cliff and everybody was looking, me included, looking for lower levels, bottoming at 29, thinking and absolutely looking like we were going to go down to 20,000. We haven't seen that kind of fear in the marketplace and panic on this action here. I think people are starting to get accustomed to the exponential quality of Bitcoin, exponential asset quality of Bitcoin, meaning it can explode up or down very quickly. And as we've seen, Bitcoin likes to make big moves up and down to kind of keep you on your toes and keep everybody fooled. The real question is, where do we go from here? So today we are bouncing around. When you look at the global timeframes, obviously uptrend is when you're going up the mountain, you're putting in higher highs and higher lows, higher highs, higher lows all the way. When you reverse trend, you're putting in lower low, lower high. That confirmed the downtrend, and it was just lower lows after that all the way to the bottom here. Then we put in a new lower high, and then we continued on that reversed uptrend to where we had our last lower high here. Why is that a lower high? It's a higher high on this micro trend, but it's a lower high on the macro cycle that we're in right now on Bitcoin. Until you cross 65,000, you have not put in a new higher high. Right now, this is still just a lower high, but the problem is that we reverse this uptrend of higher highs and higher lows by putting in a lower low. Just like we did over here, we put in that first lower low, then we backed it up with a lower high, just like we did right here. Then we had a drop, not quite as severe as this drop here, but we had that drop. Now we're in this sideways kind of consolidatory action like we've seen here. And you have to expect what comes here is what came over here. What's going to happen now is it's reasonable to expect what happened over here, a little bit of sideways action, then one final capitulation, and then we can return and reverse course. So right now we're working that sideways action a lot like we did over here. This was over the course of basically the bottom drop May 21st through June 21st, so about a month worth of sideways action where it was wearing everybody out, kind of ranging in that $30,000 to $40,000 range, kind of wearing everybody out. Then it dropped down. We started ranging 30 to 36,000, 30, 35,000. That range tightened up till the final capitulation. Then we bounced. So we're ranging now in that $40,000 to $45,000 range, kind of like we were over here, 40 to 45, somewhere in there. And then it was, well, actually it was 30 to 40 over here, whereas we're 40 to 45 over here. So if you take this price action and compare it and say, well, we dropped from 30 to 40 down to, or from yeah, 35 to 40 down to 30, 35, and we're at 40 here, 40 to 45, then maybe we drop down 35 to 40, kind of where our bottom is right now. We're finding that floor at 40. If we break down, it could go much lower, and some people are calling for it to go much lower, but it could very well be that we just drop down here to this 35,000 range. That's where your next level of resistance was, which should arguably turn into support. There really isn't a whole lot here. If we break down below 40, there's not a whole lot to stop it until you get to that $35,000 range. And then that's our last line of defense of resistance, where we could very well see the bounce to get back to reversing that trend. The real question is going to be, are we going to completely blow past 65,000 and set a new all-time high for the market? And if we do this cycle, what's that going to be? And when is it going to happen? Is it going to be 75,000, 100,000? Is it going to happen this year? So a lot of people still think that this is all going to take place this year. If you look at this price action here that we saw from this drop, that again was May, the 20th of May of this year, 2021. Today is September 28th, 2021, and it is about 2:25 p.m. Eastern Standard Time. Bitcoin's running about 41.4. So if we drop down here around the 19th, 20th of May, we ran sideways all the way till the 21st of July. So that was May, June, July. That we ran through, not the full month of May, but May to June, that was 1 month. June, July was 2 months. So that was 60 days that we ran that course of action. So we dropped here 20th of September. So if you say that we run, basically that's interesting. We dropped down here the 20th of May. Now we're dropping down here the 20th of September. So if we run through and we finished up and got to the bottom, the 20th of July, that would be the 20th of November that we could expect to bounce. And then if we bounce back, this was over a period of about a week or two to get to from basically July 20th to September 20th to get back to that top. So that was August, September, again, 2 months. So 2 months here, 2 months up. And now we've already been about, the 7th of September till the 29th. So we're working on about a month of this downtrend. So if we sideways, work a little sideways action and down over the next couple of months, then you could say that puts us into October, September, October, November. So that means we could bounce up November, December. So maybe end of January into February, somewhere around there, we could be looking at, if we follow this exact same price action, we could be looking at potentially getting back to these levels again. If we're going to put it in a high, that's when we're going to start our march. So calling for 100,000 by the end of this year doesn't match price action that we've been through, but it doesn't mean it has to. That's just what we've looked at. That's where we came from. So that's just interesting price action to kind of keep an eye on. And then when you drill it down to the hourly, you can see that we're bouncing on that $40,000 level. So 40,000 holds, we very well could reverse up to here, get back up to that 45,000 range, and we could just be reversing 40, just in this 40 to 45,000 range for a while, where we were up in that 45 to 50,000 range for a while. Now we've dropped down 40 to 45 for a while. Then we could drop down 35 to 40 for a while, and then see where it goes. So right now, that's basically what we can expect, is we're going to be ranging sideways for a while. The markets are going to do what's most likely to frustrate people and shake people out. We have the Dow Jones is down today. It looks like a lot when you look at the point spread. It's down 494 points. It was down, it's coming back up. It was down almost 600 points at one point today. We're at 551 right now, 4 to 500. I think it was at 650 at its lowest, but still, that's only about 2%. So that's kind of how the stock market especially operates. It generally slowly works its way down. Very rarely do you get this sudden drop like we had in the pandemic, where you get just that huge sell-off out of nowhere. And when you go back in time and you look at some of these corrections, they take place over a period of months. This one was February into August of 2015, 2016, when we had this little down action in the stock market where we basically dropped from 18,000 down to 15. That took place. That started somewhere in February timeframe, and then we finally hit bottom in well, I'm sorry, that was February. Yes, that took place over about, well, that was August. I'm sorry, August 26, March, April, May of 2015, all the way down into February of 2016. And you can see it was straight uphill from there. And then some of the last bigger price action moves that we had, here's the Dow Jones here, looks a lot like, if we look at Bitcoin on the daily, if you look at this price action, looks a lot like Bitcoin on the daily. When you look at the Dow Jones, this overall Wyckoff pattern here, that's where you see these things, and the correlation is when you look into the stock markets and the price action of the stock markets and how these moves are orchestrated and set up in terms of that. And it's all because of automated trading, algorithms, things like that. You can see that kind of a Wyckoff pattern taking place with Dow Jones, where you have that multiple peak top, rolls over, drops, sideways action, bounce, drops, sideways action, drop, sideways action, drop. So we had 3 drops over the course of this whole move. Started basically our first lower low, just like in Bitcoin, started around the 26th of November in 2007. And I remember all this when this was going down. We had our first lower high in December, and then it took really all the way, and that was of 2008, and it took all the way until the March of 2009 to reach bottom. Kind of interesting that the pandemic was bottom was in March of 2020, when the stock market bottom of 2008-9, that was the last big crash that we had, was in March. And then more recently we had this this is the March crash that we just had. That one was much more severe, much quicker, whereas the 2008 and 9 is more like what we're experiencing right now in the stock market, where you get this first lower high. Now the question is, are we going to put in a lower low and then bounce down, bounce down? So that's where the saying buy the dip becomes the dip, become the dip comes into play. You've heard that saying, buy the dip, become the dip, because we are conditioned as investors to buy the dips. Market goes up, always buy the dip, buy the dip, buy the dip. Problem is, that's great on a shorter time frame, but when you're in a downtrending market, if you buy the dip, then you just keep becoming the dip all the way down. Now, if you're a long-term holder, obviously on the stock market, just like Bitcoin, long-term holding is always paid off. No matter what the market's done, it always comes back, especially with Fed intervention. And unfortunately, and fortunately, that's what we are now relying on, is the Fed to step in and keep markets propped up. Are they going to continue to do that? How far will they let it go down? I think we are on the process and in the process of testing that theory to find out just how far they're going to let it go. So keep an eye on traditional markets. The capital now flows in and out of Bitcoin, Ethereum, the large cap alts, and the traditional markets back and forth. Some of the other stuff like DeFi, NFT, those types of projects aren't as correlated. Those are more speculative in general, that a lot of your institutional investors and whale investors are not playing in that arena. So some of that might be a little detached, but the big question is, where are we in the cycle? Have we put in our all-time high at 65,000 for this cycle? And now we're just going to kind of range and trend for a little while before we make any more moves up, and to see how far that goes. Are we at the end of the cycle where the altcoins have been putting in all-time highs? We've seen several altcoins ripping lately. That's kind of what I've been playing with, is the different altcoins as they're putting in their all-time highs. Filecoin, that was one that that I played with over here. This doesn't look like much on the daily, but when you break it down on the hourly, this move right here was kind of good. So I played with that one a little bit after this drop here, because generally, when do you want to buy on your red days? They say buy the dip, but you have to be very careful, because at some point this may not bounce and we might get into more of a sustained downtrend. So you have to really be careful which coins you're choosing, which projects you want to get into. And like I said, the institutional investors are sticking with Bitcoin, Ethereum, large cap alts. They're not so much getting into a lot of the NFT gaming and DeFi sector. DeFi is becoming more and more popular, but they're not in that at scale, and you have to be very selective with those. So yeah, I guess to sum it up, where we're at right now with Bitcoin is we are in on the hourly, we're bouncing a little bit. The question is, what are we going to do? Are we going to break this 40K, or are we going to bounce in this 40 to 45,000 range for a while? And what does China have to do with everything? Are they really affecting the markets? Well, there's a lot of retail traders in China. They love to gamble. They love to trade. So if China shuts down all of that activity, that's a big chunk of the market that's going to go away. That's a big force of liquidity in the markets that will evaporate. How big of a chunk is that? I don't know. China is one of the largest Bitcoin holders. So they could very well be trying to set up and shake people out so that they can either buy more, or maybe they're trying to drive markets up to exit, at a point. All we know is that you really can't trust a lot of these countries out there and what they're doing and what their real intentions are. So it's really interesting times right now in terms of what exactly the effects China is going to have on the markets. As far as their real estate problem, China has a big real estate problem. We know that we're looking at the issues with China, and whether or not they're going to let companies fail, and how they're going to handle the real estate issues that they're having over there right now, because they overbuilt and they have no buyers. They don't have enough people in the country to buy everything. So keep an eye on these traditional markets. Keep an eye on what's going on in Japan and China, and how they are handling their Bitcoin holdings and what they're doing to their traders over there. If they wipe out that trading activity, that can have a big impact and effect on the markets. And then at the end of the day, are we going to range sideways here for a while before we run off? And what you have to understand is there's not a lot of appetite for Bitcoin over 50,000. It seems like investors are good up to about 45. There's very little volume and very little appetite for Bitcoin over 45,000. So that's the reason we're stuck in these ranges. And there's a lot of money to be made in these ranges of 40 to 45, 45 to 50. And there's a lot of incentive to stay in that range, even for ETFs that are trading price action, institutions that are trading price action. They can make more money ranging than they can if Bitcoin goes to 100,000, but Bitcoin goes to 200,000. They're going to make more money in these ranges, long, short, and just trading this sideways action than they are if Bitcoin just goes up and just doubles in the next 6 months or something like that, or next 2 months. And the other question is, once we do understand where Bitcoin is going long-term, if we do set new records and come back down, how far down do we go? Will Bitcoin ever go below 29,000 again? Will it get down to the 20,000 range? I know some people are still calling for that. I'm not sure it'll ever get below 29, because it didn't before. And that's where a lot of volume stepped in to rip the price back up again. So will there ever be, with ETFs coming on board, institutional involvement, things like that, in this attractive price action range that we have between 40 and 50,000, and maybe even 35 to 50,000, if that's a range that we play in for a while, will there ever be a sustained bear market? Could be that we never see another bear market. Could be that every previous cycle in Bitcoin and cryptocurrencies that we've seen so far, going from beginning to now, those last previous cycles could be irrelevant and not consistent, or not even forecasting, what we're going to see in the future. So it could be we're in a whole different market now with the level of institutional investors in the market right now, the level of retail investors in the market right now, with ETFs coming online and things like that. I know a lot of people are saying that we'll have an ETF by the end of the year. The SEC has not said that, so don't listen to anybody, including the SEC. Don't listen to what they say. Watch what they do. Go to the SEC's website. That shows you what they're looking at, what they have on the board for approval, and when. Don't listen to anybody telling you that there's an ETF coming, that it's going to be done by the end of the year. The SEC is not even talking about that right now. And again, it's not what they say, it's what they do. So go check their website. You can see their actions that they're taking, the projects that they're reviewing, things like that. We already have the equivalent in Canada and Europe and some of these other countries where they're exchange traded products. So all that's going to do is keep price action where it's at. It's not going to drive it through the roof immediately. That's the incentive is to keep price action where it is. So good news is it could keep you from having, or keep us from seeing, a bear market long-term in the future. But it could also keep price contained within a range, potentially, depending on how this all comes out. So only time will tell. Nobody really knows what the real effects are, what everybody's intentions are, and what the real future of this asset of Bitcoin is in cryptocurrency markets. One thing we do know is that the altcoins have had a lot of tremendous upside potential. And of course, they're having explosive downsides as well. This is Cardano. Big moves in Cardano to the positive, to the negative. Solano, that's another one that I played with and, had a lot of fun there. I got out before it reached its peak of $150 from this point down around 120. And it's been kind of up and down ever since. So there's a few of them that I've been getting in and out of here and there. Uniswap's another one that I played over here. I didn't catch this move. That was a fast one. But I caught it over here. This is not something you want to buy into right now. So keep an eye on traditional markets. Keep an eye on what the SEC is doing, not what they're saying, not what people are telling you, but what's actually being done. And right now is a tricky time to be investing if you don't know what you're doing, but it's a great time to kind of watch and see where price action goes, where the market goes, and how all these things are going to shake out as we go along here through the end of the year. November, December has typically been good months for Bitcoin and cryptocurrency. So one thing you can really look at is the 2018 market cycle peak, and more particularly with Bitcoin, the recent market top that we had back in February, March, and April of 2021, and the market leading up to that from last October, November, December. That's when the market January really started moving up. So if you watch that price action, that's kind of maybe what you can expect moving forward. That might be more indicative of where we're going in the future, is the most recent price action we've seen over the last year and going into 2020 and 2021 in terms of Bitcoin and what that could potentially look like October, November, December from now. The question is, have we already seen it? Is 53-hour top for this little bounce here? And now we're going to go test these lows and range around for a while, or are we going to bounce and just shoot right back up? So we don't know. Nobody knows. All you can do is be prepared. What we do know for certain is that traditional markets have a huge impact on Bitcoin and cryptocurrencies. As you can see today, traditional markets are down, dollar is up. Bitcoin cryptocurrencies are down across the board. Pretty much everything's down. A couple of coins here or there that are up a little bit, but not much. Nothing's really ripping today like it has been 10, 20, 30%, 5, 6% today. So the markets definitely have an impact. It's risk off right now. Treasury yields are rising. The power of the dollar is rising. Capital is getting out of risk assets, going into the safe havens of treasuries and the dollar. Whether you agree with that statement or not, it doesn't matter. It is what it is. That's what institutional investors, sovereign wealth funds, that's what the big money, the smart money out there, that's where they go in times of turmoil and uncertainty. They go to the dollar, they go to treasuries. That's just what it is. It's not my opinion. It's just the facts. And you can look at the charts, backs it up all day long, and you can see that's why we're seeing the price action we're seeing today. A little bit of the China uncertainty, but mostly because of the uncertainty in the economy as a whole. We're seeing serious inflation globally. We are seeing lack of growth globally. So that leads to stagflation, high interest rates, things like that. So very uncertain times. That's why money's going into treasuries. That's why the yields are up. And that's why bond investors are heading in that direction. And that's why the dollar's up today. But could just be a little cycle here of liquidity and profit taking. We're likely a lot of times coming off these red days, we see big bounces. So tomorrow, later tonight and tomorrow could be very interesting. And just be careful out there and make sure that you cover your risk, cover your downside, have your stops in place so that you can limit your downside.